Good morning to everyone and thank you for choosing today's market briefing, financial market news analysis each day. Our goal is to provide you with a deep and expert analysis of the most relevant financial news to help you navigate the complex economic landscape. We're pleased to deliver our content every morning, prior to the opening of the U.S. markets, offering you a competitive edge for your trading day. Now, let's begin our daily review. Major developments in international finance, June 7, 2023. U.S. stocks close slightly higher as markets stabilize. U.S. stocks closed slightly higher on Tuesday, as the market continued to stabilize following the recent volatility. The S&P 500 closed at 4,283.85, up 0.24%, while S&P 500 futures settled at 4,291.00, showing a modest gain of 0.03%. Investors regained confidence and uncertainty surrounding economic conditions reduced, leading to a sense of calmness in the market. The positive performance in the U.S. stock market reflects this improved sentiment. Asia-Pacific markets show resilience despite negative economic data. In the Asia-Pacific region, markets demonstrated resilience despite the release of negative economic data. Most markets traded higher on Wednesday, with the exception of Japan's Nikkei 225, which fell around 1%. China, the world's second-largest economy, reported a significant decline in exports for May. The country's exports plunged 7.5% year-over-year, reaching $283.5 billion. This drop was much steeper than the 0.4% decline economists had anticipated. The weaker-than-expected export figures raise concerns about China's economic recovery and its ability to maintain a robust level of global trade. Australia's first-quarter GDP figures were also disappointing, with the economy growing at a slower pace than forecasted. The GDP rose 0.2% quarter-on-quarter, lower than the expected 0.3%. On a year-over-year basis, the economy expanded by 2.3%, also falling short of the 2.4% forecast. This represents the slowest pace of growth since September 2021, highlighting the challenges faced by Australia's economy. Despite these negative economic indicators, markets in the Asia-Pacific region showed resilience, indicating that investors may be looking beyond short-term setbacks and focusing on long-term prospects. European markets trade higher despite Germany's manufacturing dip. European markets traded higher, with Germany's DAX index ticking up by 0.18%, despite a setback in the country's manufacturing sector. Germany's manufacturing unexpectedly fell by 0.4% in April, reflecting potential challenges and uncertainties in the industry. Despite this decline, the broader European markets managed to maintain a positive trajectory. The positive performance in European markets suggests that investors are looking beyond the temporary dip in manufacturing and are optimistic about the overall economic recovery in the region. Crypto exchanges face regulatory challenges. Crypto exchanges faced regulatory challenges, leading to significant declines in their stock prices. The Securities and Exchange Commission, SEC, filed a lawsuit against Coinbase, alleging that the exchange operates as an unregistered securities exchange and broker. As a result, Coinbase shares plummeted 12.1%, adding to the 9% loss it suffered on Monday after its rival, Binance, was also sued. In addition to the lawsuit against Coinbase, the SEC filed an emergency motion to freeze the assets of Binance. U.S. The regulatory body alleged that Binance founder Changpeng Zhao illicitly transferred $2.2 billion of U.S. customer assets to other entities under his control. These developments have further intensified scrutiny on the cryptocurrency industry and raised concerns about regulatory compliance. The regulatory challenges faced by crypto exchanges have had a significant impact on their stock prices and raised questions about the future of the cryptocurrency industry as regulators tighten their grip. Before we continue with our analysis, we'd like to remind you of your support for our channel. Today's market briefing, financial market news analysis. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. World Bank adjusts growth forecasts. The World Bank updated its growth forecasts, projecting a slowdown in advanced economies while expecting growth in emerging and developing economies. The bank anticipates that advanced economies will only grow by 0.7% in 2023, a significant decrease from the 2.6% growth witnessed last year. In contrast, emerging and developing economies are expected to expand by 4%, representing a 0.6% increase from the World Bank's earlier projection in January. The World Bank's revised growth forecasts reflect the challenges faced by advanced economies, such as the impact of the ongoing pandemic and other economic factors. At the same time, emerging and developing economies are expected to benefit from various factors, including favorable commodity prices and increasing domestic demand. Tech giants face challenges. Shares of tech giants Apple and Boeing face challenges in the market. Apple's shares dipped 0.2% as investors digested information about the company's new mixed reality headset, the Vision Pro. This marked the first time since 2016 that Apple shares fell a day after its Worldwide Developers Conference. Boeing, on the other hand, experienced a 0.7% decline in its stock price. The company announced a delay in the deliveries of its 787 Dreamliner planes due to a new defect. This setback raises concerns about Boeing's production schedule and potential financial implications. The challenges faced by tech giants like Apple and Boeing highlight the risks and uncertainties inherent in their respective industries. Investors closely monitor such developments to assess the potential impact on these companies' financial performance. Market outlook and Federal Reserve meeting. Despite some recent stumbles, U.S. markets managed to climb as the uncertainty of previous weeks dissipated. The CBOE Volatility Index, which measures investors' 30-day expectations, dropped to 13.96, indicating increased confidence and reduced volatility. The S&P 500 rose by 0.24%, the Nasdaq Composite added 0.36%, and the Dow Jones Industrial Average remained relatively flat. However, trading volume was lower than average, suggesting that investors are taking a breather ahead of the upcoming Federal Reserve meeting scheduled for next week. Market participants will closely monitor the Fed statements and any potential policy changes that may impact the markets. Stocks. S&P 500 futures were little changed as of 5:42 a.m. New York time. Nasdaq 100 futures fell 0.2%. Futures on the Dow Jones Industrial Average fell 0.1%. The Stoxx Europe 600 fell 0.1%. The MSCI World Index was little changed. The MSCI Asia Pacific Index was unchanged. The MSCI Emerging Markets Index rose 0.6%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0695. The British pound rose 0.1% to $1.2439. The Japanese yen rose 0.2% to 139.29 per dollar. The offshore yuan was little changed at 7.1323 per dollar. Cryptocurrencies. Bitcoin fell 0.8% to $26,721.77. Ether fell 0.5% to $1,867.92. Bonds. The yield on 10-year treasuries advanced 1 basis point to 3.67%. Germany's 10-year yield declined 1 basis point to 2.36%. Britain's 10-year yield declined 2 basis points to 4.19%. Commodities. West Texas Intermediate crude rose 0.2% to $71.88 a barrel. Gold futures fell 0.2% to $1,978.10 an ounce. In conclusion, we'd like to thank you for watching today's market briefing, financial market news analysis. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.